Welcome to Mission Critical, Sale Leaseback podcast by Ascension, the world's #1 sale leaseback show. We share the latest in sale leaseback advice from the best in the game to keep you at the cutting edge of the hottest emerging practices in corporate real estate. I'm your host, Tom Johnson.
We talking sale leaseback.
Yeah, you ready?
Welcome to the podcast. My name is Tom Johnson for Ascension. I'm joined today by Ned Hennessey. Ned is a vice president for Ascension. Ned actually specializes in the auto dealer industry. First of all, Ned, welcome to the show.
Thanks for having me, Tom. Glad to be here.
Well, we're out here for the Waste Management Open, and we'll talk as to why you're out here and who you're meeting soon. But, why don't we kind of jump into your background? I know originally when you got out of college, you started at another national investment firm, doing investment sales, doing net lease, doing some sale leasebacks in the auto dealer space. But you really kind of fell into being solely an auto dealer specialist. And you've really excelled in the last 12 to 18 months. So think about like our audience here and who they are. Going back to some of the people that I've interviewed, Colin Hart specialized in advising, medical office groups. Interviewed a woman named Yanni, who was in the private equity firm, and they were in the tech space. They were in, very operating-centric type private equity firm. I interviewed a real estate broker, Tom Edson, out of London. And, what he did was he advised the grocery stores. And so what he was interesting about that auto space, it's been in the news a lot. Cars are very expensive. Carvana, for better or worse, they've had, some lots of up and downs. So like thinking about the audience here and who we are thinking about advising business owners or work as business owner investments, like what's different or unique about the auto space that maybe, we don't see in the medical field or just in some other types of businesses?
So I think, in the auto space, and, this may not be so specific to this space, but it's such a focus is that there has to be growth through scale. Having one dealership versus having 30 dealerships is, monumental to, the bottom line of these operators. And, in the dealership space, returns are huge. Returns on their capital are 25 to 30%. When you look at, a sale leaseback and you look at, dealership real estate, dealers historically have always been taught to own their real estate. So when you perform a dealership buy-sell transaction, when a dealer goes out and they buy another group or they buy a single dealer point, they'll acquire the business on something called Blue Sky, which is basically, it measures goodwill. It's, an earnings multiple that is called Blue Sky. And, typically in an acquisition, dealers will go and they'll buy the real estate at an appraised value, land and improvements. So they'll go out, they'll make an acquisition, they'll buy the real estate at appraised value. And what's been so interesting in talking with these dealers is, what we can actually do is we can create a simultaneous transaction where dealer goes out and buys a dealer point for, let's say, 20 million. They buy the real estate at X, they buy the Blue Sky at X. Oftentimes, we're able to perform a sale leaseback, resell that real estate, create that liquidity from the real estate while ensuring mission critical control at a number that's even higher than where they bought the, appraised value real estate and the business. So in terms of a growth tool and value arbitrage, it's very simple. It's financial engineering that comes in, and when you can put capital at a 3x multiple, from where you bought it and then put it into, a machine, essentially the operational business that generates 25 to 30% and continue to do that over and over and over again through acquisition and, repetitive sale leaseback, you're looking at, dealers that have, 4 or 5 locations that can, quite frankly, grow to 50 locations plus and monumentally increase their profitability and their capital uses in that way.
No, that makes a lot of sense. So what are some of the challenges then that are facing, specifically the dealer space right now, where that sale leaseback, that infusion of capital is really helpful? And I guess maybe in many cases, like almost necessary. What are the hurdles or obstacles in front of the dealers right now?
So the dealership space, I would summarize, is an acquire or be acquired state of the market. You either need to grow and scale, or you're going to get eaten up by the competitors, because there's a huge consolidation happening in the dealership space where, little players are just getting eaten up by these bigger players because they cannot sustain, or it just makes sense to get out because they're just not going to be able to compete. So then you have, pressures from the manufacturer. There's threats of a direct-to-consumer model or an agency model that's been adopted in Australia and parts of Europe, where, the dealer is no longer franchise part of the business. It's, you get allocations from the dealer, you sell them at X price, it's fixed, the margins are not as variable, and therefore it's sort of monopolized by the manufacturer. And, personally, my opinion is that, as these dealers grow, it's going to be a lot harder to push them around and enforce a model like that if you're a bigger player like a Lithia or an AutoNation or a big dealer group, because you're completely in control of the inventory movement from these manufacturers. So I think, by scaling, you put, some body armor around yourself from the manufacturer, and you become really a necessary part of the business plan. You also have electric vehicles coming into play, reducing, the bottom line of these dealership income statements. Electric vehicles don't need as much service and parts. That's about 60% of where the revenue is generated in the dealership space. And, EVs aren't going to come, overnight, but it's happening. It's definitely happening. It's being adopted. It's being incentivized by, the government. Manufacturers have said they're going to stop making internal combustion cars, which, we'll see if that happens. But, what that will look like in terms of profitability will be, much lesser at a unit level. So to continue to meet that bottom line that you've been achieving, you're going to need to scale. You're going to need to get as big as you possibly can if your margins are going to get crunched. And, the sale leasebacks are really the answer to that. It's the maximum use of your capital to then grow and really put your capital and your equity to work in the most efficient places. So the consumer's cost of capital is going up. That's disincentivizing, a lot of consumers to then go out and buy a car or to, finance really anything in the space because the interest rates are so high. Theoretically, the price is going down because the interest rates are going up. But, we're heading into, a little bit more of a recessionary market. Consumer sentiment is lowered than it was, in this sort of make-believe cost of capital is essentially free, time that we've left. So, the consumer is faced with a higher cost of capital. The dealer is faced with a higher cost of capital, so the margins are much less. Dealers buy inventory on something called a floor plan. It's basically a line of credit from a financing entity. They go out, buy a car, they move that car within a certain amount of days, but while it sits on the lot, the car is costing money, it's costing interest, and then has to be paid back. So, the longer a car sits at a higher interest rate, the more money the dealer is just eating, so it incentivizes the dealer to just sell the car at cost, bring in some more inventory to try to move and profit. And then you have the aspect of, dealerships make a lot of money either collecting a fee on financing from a bank or, a lender, or they, have internal financing departments where, if people aren't buying as many cars because the cost of capital is higher, you're not making as much money in fees, you're not making as much money from internal financing. And what you're also facing is much higher cost of default because people are making less money. Their cost of capital is much higher. The risk of default, especially in the subprime lending space, is growing rapidly. And people are tightening. Lenders and financing entities are really tightening their standards. They're not, letting as much money go out into circulation because there's a much higher risk than there was before when we were kind of a make-believe, money is free, this is going to last forever atmosphere the last 3 years, which were, record profitability years for, almost every single dealer in the United States.
A year or 2 years ago, when one approached the dealership and said, hey, here's why sale leaseback would benefit you, was part of the pushback like, yeah, I see it, that makes sense, but I can get really cheap debt right now. So if anything, sale leaseback even makes more sense because debt is so much more expensive now. And we already know it makes sense. The equity's trapped and it's locked in real estate and it's not getting as good of a return. But it sounds to me like it makes even more sense now than ever to tap that equity.
It does. So, going back on the first part of your question, it's a double-edged sword in either scenario, right? So in a very attractive, capital market like we just saw, dealers are making, insane profits. They're making insane profits both on, front-end sales by the actual, vehicle, selling new vehicles, which is very rare. And we're talking about, sometimes $10,000 over sticker per vehicle. And, cost of capital is extremely low. So, talking to dealers in the previous market, you say, look, this makes a lot of sense for growth. This is, the most efficient use of your real estate capital. And it's hard to argue against that because you're 2 to 3xing your appraised value of your real estate. So your terminal value of your real estate is being maximized at, the highest price it probably ever will sell for. And then you're controlling your real estate and then you're putting it to an operation or an acquisition. It's hard to argue that there's any other, more efficient use for that capital. And, talking to dealers then, the pushback was really, look, we've got a ton of cash. We've got more cash than we've ever had before. And, adding more cash to that is going to, what do we do with the money? So we had to get creative. We had to talk about, alternative investment strategies with some of the capital, putting some of it into growth. putting some of it into the current operations, going out and making acquisitions, and such an influx of capital, especially when you're doing bigger deals, you have to get creative. And the last piece of the puzzle for something like this is, okay, we do this, we maximize the value. Where do we then put the capital, right? To cap everything off. You have to figure out how to allocate that capital after you exit via sale leaseback. And then now in this current market, it's flip-flops. So you've got very high interest rates, just point blank. This is, very attractive alternative financing. Go back to, most efficient use of your real estate equity, hands down. So, now we're in a market where margins are not they're much thinner. You're not making as much money. You still have, some leftover cash, but this is the time to scale. This is the time to grow. This is to go make, opportunistic acquisitions. When you see people sort of faltering in, adjacent markets, go take that market share, go grow, go cement yourself as a player in perpetuity, in your market or, globally.
And then you were saying earlier, I think it was like one of the other questions I had, which was the maintenance service departments, divisions and leadership. So if I understand it correctly, that's the biggest revenue stream. It's not the auto sales. It's not the financing. It's typically the service. That's the one they want to go after the hardest.
Correct. So, traditionally, taking out of the equation really the last 3 years, because they were complete sort of anomaly years in the dealership, profitability space, traditionally, and probably still the case, service and parts make up about 50 to 60% of, dealerships' revenue, typically. Sometimes more, sometimes less, but typically within that little chunk. So, last year you were seeing oftentimes dealers, in a traditional market do not make much money on a new car sale. They sell the car, maybe make a little spread, but it's everything that happens after the fact. It's all the back end profits. It's service, it's parts, it's financing, it's insurance, it's reinsurance. The car, for lack of a better word, acts as a vehicle to then throw all this other stuff on. And then it just becomes, net receivables factory, the dealership does. It's like, buying a printer, right? You buy a printer, you're buying the ink. You're not buying the printer, you're buying the ink, you're buying the repetitive, ink purchases. And that's sort of what a car is.
That makes sense. A couple more questions then. I want to shift to this. The convention that you just went through down in Dallas, used car dealerships. I mean, is it really much difference these days? I mean, yeah, I know we see CarMax and Carvana, but I went and looked for a new car recently. And, you go to the dealership, yeah, they have, new car lines there, but it seems like, they've got just as many used these days. Is that really a distinct business? Much or once again, are they really, that's the vehicle, for lack of a better word, as you said, to get in, to the service and all the sticker shock or sticker things that they are able to add on?
Right. So, we saw an interesting market previously where, COVID happened. We saw supply chains essentially just stop working. I mean, people, couldn't work. Things couldn't be built. And the car is, compilation of so many different parts. You've got everything from the wheels up, and you've got chips. You've got so many computer parts nowadays in new cars that when manufacturing ceased, that created such a huge gap from, manufacturer to consumer that, there was no new car inventory. Therefore, people were paying absurd prices for anything they could get their hands on. But what that also did was it raised the values of used cars. When there's no new car inventory, people need to go buy cars. People still want to go spend money. Money is very cheap, or it was. And therefore, a lot of people are going out and buying used cars. I mean, if you look at the bubble, or chart of, used car prices, they tanked at, the front end of 2020, and then they spiked to, historical highs, in the last 3 years. They're now starting to come back down, but they're still, much higher than at any point that they've been in pre-COVID. So, it's really just a supply and demand matrix. And, it's what's available. Take the money supply that is going to be allocated by consumers to cars, whether it's new or used, and then just take what's available. What can people buy if it's, new or used? But, there's profitability in both sectors. I think used cars, they're a different model. They break down a lot more. So you're going to be, because they've got more wear and tear. So you're going to be servicing and, putting parts, revenue more attached to these used car sales. And then financing is typically you're making more on a used car than a new car because there's a riskiness to it. It's not a brand new car. So, both models I think are profitable. I think there are some, used car players that make a lot of money and have gotten really good at the model and controlling inventory and cycling inventory. I think, cycling inventory in the used car space, getting it off the lot, whether it's, it's been sitting there for a while and you need to cycle it at value or, making profit is an art. There's some groups that are really good at it. And, with threat of the manufacturer coming in and saying, hey, we're going to take out the new car model. We're going to go direct to consumer or agency, there's a lot of thought that, hey, maybe used cars, being independent dealers and just, playing around with the inventory basically in the secondary market maybe it's something that we haven't really thought about. Maybe that's going to be the frontier of, really control from the dealerships in the space. I don't know. But, if pressures continue to mount on the new car model from the manufacturers, and these independent dealers can do whatever they want. They're selling secondary inventory, direct to consumers, and they can't really be told what to do. There's nobody really above them feeding them inventory. They're buying what's already out there. So, it's going to be interesting, I think. And I've thought a lot about this, on 20 years from now, what does the dealership market look like? New and used. Used probably isn't going to change that much. We've got models like Carvana that came and went or are heading out the door. But, they prove something that, the consumer wants fast digital service that happens quickly. You don't want to go sit in a car dealership for 3 hours and wait for a car. Nobody wants to do that nowadays. We want instant gratification. So I think, in terms of sort of a niche and frontier, the used car space is just as interesting as the new car space.
No, I know it's evolving. Good friend of mine just went and bought a Tesla a couple of weeks ago, and they slashed the price on their Model Y. He bought it on his phone, went to the dealership, pulled up his phone, and from what he told me, it was like, they were like, there's your car. All right, you're off. So, right, yeah, you can buy Tesla, making the process easier. I mean, look, I know personally myself, last 3-4 cars I bought, I used a car broker. I don't want to deal with the dealership half the time. I don't want to go there. So I have that person do the negotiation for me. So I think from the dealership's perspective, they're probably learning this, getting more technology savvy, greeting people with the apps and some of those things, making the car buying process easier. I mean, isn't that the one thing that's beneficial about Tesla? And a lot of people's, there's no negotiation, right? There's a surprise when you're off and running. I mean, for a lot of people, that's refreshing, right? Because they don't want to be there for hours trying to figure out that stuff, right?
Right. I mean, I think, when we know what we're getting, we'll often pay a premium for it. I mean, look at everything that we do. We pay, premium for food. We have DoorDash, we have Uber Eats, we got all this. We'll pay, an absurd amount of money, often not even realizing what we're doing for that instant feeling that, I didn't have to spend any time or energy doing this. It was the quickest route, right? It was a direct line route to...
Yeah, I'm getting more groceries delivered almost every week. I've got little kids at home. Busy wife too. Spend an extra 30, 40 bucks, if not more, a week just on delivery. So yeah, the money's going to be all business.
Yeah, the money is where, the consumer can be serviced in the most efficient, both time and energy way. And they will pay more for it. It's been proven and, across, different verticals, the consumer will pay more money for, consistent, easy, not time consuming and not energy consuming service. And that is, I think what, these dealers are focused on is, how do we do that? How do we do that to the best of our ability? Because that is how we stay most relevant.
So let's wrap up. Tell me, before we go, tell me about this, big conference that you went down to in Dallas a week or two ago. Why you went, what was so exciting about this one, and why you're going to continue going to these.
Absolutely. So, I think these conferences are amazing, especially in the auto industry. The auto industry is so unique. It's got so much energy. It's a big world, but it's very small. Everybody's kind of, they know each other. And they're very much there for each other in terms of, information and just how everyone interacts in the space. And I think, especially getting, past this time of COVID where nobody could do anything, there weren't any conferences, you're doing business, high level business, with people, over your computer. And it was sort of weird. It normalized, but, it's so important, I think, to go shake hands, eat dinners and, see these people and really communicate to them face to face, both from a trust perspective, but also it's just human nature. It's what we're meant to do. And I think, some of the best relationships are built by, going and, seeing clients and people in your respective space in person, showing up, being there and, talking about specifically NADA, National Auto Dealers Association Conference. It's, probably the biggest, automotive event of the year. Fantastic event. The energy and the sentiment, from everybody there, despite, the conversation and of these threats to the industry and the industry changing was sky high.
Like what? So what are the types of people that you're meeting?
So conference was in Dallas, Dallas Convention Center. You go in and it's thousands of everybody in the space from, thought leaders to venture capital groups to M&A groups on the dealership operational side that, we do a lot of business with. To auto auctions, to software companies, to there were I think 2 or 3 miniature planes in this conference center. I mean it was insane. To hydraulic companies, really everything that could be service to a dealer, whether it be software or hardware or consulting services or architects. I mean, there was every single facet of the dealership business that you could possibly think of there. And that was so important for me to meet because I think a lot of the connections that, I've realized are not always, directly to clients. They're sort of talking to the more peripheral businesses, developing relationships, and then, happening to develop relationships and finding opportunities through them, through their clientele, and then, also benefiting their business by, sort of outletting their business to my clients as well. And it creates a synergy. And I think that is, as a whole, what really represents that conference and the industry as a whole is there's just such a synergy at every part of the business of everybody trying to really benefit each other. And, there's a lot of camaraderie. So it was great.
A lot of times people are going to that, and the software company or the manufacturer of, service parts of the dealership, they're talking inventory or talking how to, new service contracts between them. And a lot of them aren't actually thinking about the real estate and how the real estate can help benefit them. So that's kind of where there's a tremendous opportunity for someone like yourself to, now circling back to talking about sale leasebacks and all that, right?
Absolutely. And I think, directly to those businesses and their, applicable real estate, but also just getting them thinking about that so that they can have conversations with people that it is applicable to, whether it's dealers or other people in the business, auctions, because this space is so large and we've really just touched the tip of it, in the dealership, new and used dealership space. I mean, there's the RV space is massive, the motorsports space. I met with a lot of really, really impressive motorsports dealers at the conference and really look forward to diving in more to their real estate, to, marine. There's tons of niches in this space that are underserved, but this, sale leaseback process, it works magic for these guys in terms of growth and just optimizing their capital. And I think what you're going to see is that we as a team, Ascension is going to be just an absolute driving force, really creating this market within this niche space and being the player that really dominates and dictates, what goes on and delivering, the absolute best service for our clients, whether it's on the sale leaseback side or just real estate advisory in general. But, I hope to build this where, if you need anything in the dealership space, sale leaseback or not, you come to Ascension. And that's the goal.
Very cool. Well, let's end with this. You know what they say, a successful guy by the watch he wears and the shoes he has. But Ned, you're an auto guy. So you know how successful you are by the car that you drive, right? Look, you only got out of college a couple of years ago. Now you're having a big year. So I'm not going to put pressure on you to tell us what car you're driving now. But after your next $1 million year, what is your next big car you're buying? What's your dream car like?
I bought an Audi A4, which is a nice car. It's got a turbo in it. It's sweet after a good year. And I love that car. It's my favorite car I've ever had. But, if I were to buy another car, I really do like the electric space. I mean, instant torque. I like to go fast. I think a Porsche, like a 911 Turbo S, internal combustion, 2.6, 0 to 60. I'm going to need to have a better than $1 million a year, but I don't see a better time to deliver. So maybe that's the end goal at the end of the year.
Awesome. All right. Thanks again for sitting in here on the podcast. Look forward to seeing you soon. And welcome to Scottsdale for the Waste Management.
Thank you. Yeah, beautiful. Yeah, the sun's out. Get some waste management in tomorrow and meet with Realty Income. Excited to be here. Thanks for having me.
Mission Critical, a sale leaseback podcast by Ascension. To find out more about Ascension and how we can help you achieve a higher standard of real estate advisory, visit www.higherascension.com. And then make sure to search for Mission Critical in Apple Podcasts, Spotify, and Google Podcasts, or anywhere else podcasts are found.
We talking sale leasebacks.